Welcome, everyone. This is yours truly, David Morgan, for another in the Mastermind series. And today we have Ted Butler, the not so famous, but to be famous Ted Butler. It's interesting that the name of the late, great Ted Butler that did so much with the Commitment of Traders report and so much writing, and the older Ted Butler, now deceased, God rest his soul, did a very lot for the silver community, especially when it came to the paper trading. So anyway, here's Ted, our Ted. Ted is an independent precious metals analyst. He works closely with me. And I need to shout out a little bit of claim to fame here, because one of the most widely watched, read, and understood periodicals in the silver and gold spaces and Gold We Trust by Ronnie Stoffele. I don't know how many years he's been writing it, but Ted has been the writer on the silver side for the past 2 years.
Thank you for having me, David. I really appreciate it. Obviously, been writing for you for over 2 years now. And I've been writing for Ronnie. This is the third year I've written the silver chapter. And Ronnie's been writing the In Gold We Trust report along with his colleague Mark Valek for 19 years now. So nearly 2 decades. And this year's title of the overarching 450-page report, which it was a lot of hard work from probably 20 people in the team, was The Big Long, a nod to the film The Big Short. As many people will know, documents the whole global financial crisis in 2008, all the sort of irrational exuberance around that period. Well, the theme really this year is that we're kind of, for baseball fans, we're in the sort of 5th or 6th innings of this gold bull market, and that the years to come and the months to come even will extend itself to performance gold. And that's a term that we're using for silver, mining stocks, and commodities more broadly. And so the idea is that silver is going to be part of that group of performance gold that's going to take on the baton and really lead this outperformance of the broader gold market, gold bull market. So the title this year, as you can see, hopefully on your screen, is Searching for the Silver Bullet, an analysis of silver price catalysts, a lesson from Warren Buffett. Obviously, many people know that Warren Buffett purchased about 25% of entire silver mine production in 1997 and 1998, 129 million ounces. And this was all sort of grounded in the similar reasons I believe in the silver investment case today. You know, equilibrium between silver supply and demand was only likely to be established by a somewhat higher price. You know, Warren Buffett, fundamentally a deep value investor inspired by Benjamin Graham, of course, who was his sort of mentor. And they're just kind of trying to reconcile the expectations that silver investors have, because in actual fact, the silver performance hasn't been awful over the last 5 years. I think we've got a chart here that shows that actually, I know it's got cherry picking the price slightly, but silver's outperformed in the last 5 years. And later on, we'll show that silver's actually outperformed 6 out of the 8 times in its own bull market relative to gold since 1967. So this silver gets an unfair rap, in my opinion, in terms of the outperformance that it actually delivers. And that was really the initial idea. And throughout the rest of the chapter, we basically talk about, the main catalyst, whether that's the demand side, whether that's supply side, but that's simply the historical undervaluation of silver. And that's, for me, is the place I'd like to begin, David, is this unbelievable historical undervaluation. We're now, if I can zoom in on this chart, as you can see, and as you know, we're at 100 gold-silver ratio, just over 100. Now, simply if we revert to the mean, as we talk about in the paragraph below here, reverting to the historical mean since 1970, which is around 60, would translate to a $55 silver price at a gold price of $3,300. That's significant because, I mean, let's just keep going. Let's just talk about the other ends of the spectrum. More conservatively, a return to the average gold-silver ratio since 2000 would equate to a silver price of $48. So still, almost double what it is today. And the average gold-silver price ratio over the last 110 years would command a silver price of 63 US dollars. Now, depending on where you determine gold's breakout in the recent bull market, you're going to get a different result. I believe that gold's first official breakout was in 2020, with its high of sort of 2,068 was in December 2023. It's important to point out that this breakout was not meaningfully sustained until March 2024, when it actually really broke above its previous all-time high with conviction. And this is something that I think plays into solar's and silver's hands. Admittedly, this year, solar capacity new additions did take a bit of a fall, but that was considering it was a record year in 2024. So it's more kind of on initial first glance, it kind of looks, oh, solar's slowing down, but actually it's just kind of regulating back to where it was, back to the average. So I put some numbers together to sort of extrapolate what the silver consumption would be from solar, sort of looking into the future. And if you kind of consider this, so I'll just read it straight from the text. A 60-40 split between TOPCon and PERC based on the higher end of China's 2025 solar capacity additions, which were forecast for 255 gigawatts, will translate to 171.8 million ounces of silver demand. And I wouldn't be surprised if this year we see a similar revise from the Silver Institute. The BMO actually differ in their estimates for 2025. I think the Silver Institute reckon it's going to still be below 200 million ounces, and BMO think 2025 will be 246 million ounces. That's nearly 50 million ounces difference. That's not inconsequential. Qatar is one of the biggest companies in the world, if not the biggest. And BYD also is slightly faster, although I think that depends on the charging infrastructure that you use. Estimate silver content, this is the huge kicker, 500 grams to 1,000 grams per battery. Compared to 25 to 50 grams for the typical lithium-ion battery version. And you make a great point. I should have mentioned that actually here. Yeah. It says, thanks to the AGC layers regulation of lithium deposition helps facilitate the battery's lifespan of up to 20 years. So yeah, it's a longer life. More expensive, but longer life. So. Yeah.
Well, I have to digress since our mastermind groups get a little funny, but when I was in business school, we asked our professor about marketing, and he just said, there's two marketings. You can have the Maytag strategy where you buy a washer and dryer when you get married and maybe one more before you die, or you could do the other one, Whirlpool or whatever it was, that you're going to have to buy another one every 8 to 10 years.
You got Macron saying things here. I want to believe the US will stand by us, but we have to be ready if that is not the case. European states must be able to defend themselves better and deter any aggression. The future of Europe does not have to be decided in Washington or Moscow. The innocence, so to speak, of the last 30 years is over.
And the last thing, going about ETPs in general, it's rather startling to me that we aren't seeing the institutions come into ETPs, because the algorithms are there and they're flashing like a red light at these people, but yet they still seem to have their hands in their pockets and can't seem to find that mouse click. And that is a whole nother story, but it does make one wonder why you're seeing, let's say, less institutional involvement than you might have in the past. And I think there's a reason for that, but voice it. Go ahead, Ted.
No, that is a rabbit hole that I would love to go down sometime as well. Is this, why is the silver price lagging? I think that deserves a podcast in itself. I would argue just briefly that probably there are some kind of convergences between the industrial players and the institutions in terms of their desire for a lower silver price. That would be my guess.
When Scott Maynard from Guggenheim, their chief investment officer, was asked by Bloomberg what was his go-to investment for that year, and he said silver, and these guys almost swallowed the microphone. They were so startled. In that year, the investment demand through the ETPs was 320 million ounces. Now, I'm not saying it was all from Guggenheim. I have no idea, but I suspect a lion's share of that amount was. So in that year, 2021, there were 520 million ounces for investment purposes. So that added, the norm is around 200 million ounces, and that's almost all retail, with some trading back and forth with the ETPs. So if you go from what I just said, 520 million ounces in 2021, and but Ted just said a minus 200 million ounces last year. That's a heck of a swing. So what I'm about to say now, you can take it with a grain of salt, but I believe that I owe it to our mastermind group. And that is this. I spoke at the New Orleans Gold Conference, Brian London's annual gold show in New Orleans, 50th anniversary. Brian opened the show. The next in line was Avi Gilbert, and he's an Elliott Wave guy. And he introduced himself. I've known him for years. I met him at the PDAC probably 7, 8 years ago. Anyway, what he said during his speech is that gold would peak at $3,500 the ounce this year, which so far is correct. But what he said after that will make some of us precious metals people not very happy. What you've just seen are only highlights, selected snippets from a much longer, much deeper conversation inside our private Morgan Report Mastermind session. Every month, we gather the sharpest minds in precious metals, economics, and geopolitical strategy. We go beyond the headlines. We dig into what's really happening beneath the surface in the markets and policy and in the global financial system. And here's the truth. If you're trying to protect your assets or build lasting wealth in today's environment, you can't afford to rely on mainstream narratives. You need insights that are ahead of the curve. You need direct access to people who've been through cycles, who've seen this before, and who know how to navigate what's coming. The mastermind is where that happens. It's where serious investors get direct access to people like me, Ted Butler, Mike Maloney, and other industry veterans, the ones who've been right when everyone else was wrong. If you're already a subscriber to the Morgan Report and you've been getting value from the newsletters and monthly videos, upgrading to the mastermind is the next logical step. It's where everything comes together. It's where you get the edge. If you're not a member yet, this is your invitation. Don't wait until silver breaks out. Don't wait for another crisis to start asking the right questions. Join now. Be part of the conversation. Be the investor who's informed, prepared, and positioned before the crowd catches on. Consider joining or upgrading your membership today. For full details, email me at support@themorganreport.com.